Hey, Kelly. So a lot of the story has to do with technical and macro catalysts, which are playing a major role in this recent breakout. So you have the expiration of options at the end of June, and that really helped to clear out lingering sell pressure, which unleashed volatility that had been pinned up by large open interest. So essentially what was happening was that short sellers were building up around that 110K to 120K level, and then they were forced to cover as Bitcoin broke to new highs. And that's a move that really echoes what we saw in late 2024 when Bitcoin jumped from 70K to 90K in just a few weeks. And if you're looking at a similar 30% breakout from here, like if you're going from a base of 110K, that would suggest upside toward $140,000. And you guys hit this off the top of the show. It's worth noting that after decoupling during the ETF-driven run-up, Bitcoin is now very much trading in lockstep with the resurgent NASDAQ.
And so we have some of those events you mentioned, Mac, with crypto, all these things. What else are you hearing from the community? We often talk about this, but even as the price is shooting up, who are the buyers who are coming in here? Not the ones who have been holding it for 5 or 10 years, but kind of the new money coming into the space.
Well, that's exactly it. It's the acceleration of structural demand as Bitcoin becomes a mainstream macro allocation. So those spot Bitcoin ETFs now hold over $155 billion, up from zero just 18 months ago when they launched. BlackRock is the big winner here. Their IBIT fund nearing $90 billion. It's already one of the top 20 ETFs in the US. And this isn't just about flows. It definitely reflects a broader shift. You've got everything from pension funds and sovereign wealth funds to corporate treasuries that are now allocating to Bitcoin, especially after the Department of Labor cleared the way for crypto exposure in 401k plans this May. On the Bitcoin treasury side, you've got companies like GameStop and even Trump Media that are following the Michael Saylor playbook, treating Bitcoin as a strategic asset on their balance sheet. Trump Media plans to acquire $2.5 billion worth of BTC. And according to Bitwise, those corporate treasury holdings jumped 23% last quarter, topping $91 billion by the end of Q2. And at the same time, in terms of what we're seeing in the markets, you've got this wave of reverse mergers that are turning dormant public companies into public treasuries. And with names like SoftBank and Cantor backing these projects, we're looking at this new army of purpose-built publicly traded vehicles designed to hold Bitcoin at scale. And that's really showing up in the price action we're seeing.
Now, Mac, how much of this is also fundamentally driven by the excitement that's being generated around this kind of so-called crypto week that's developing in Washington, D.C.? There's going to be a lot of activity happening on the legislative front with regard to debating just how much we can regulate cryptocurrencies in the coming months and years.
Yeah, it's a great point. The policy environment around crypto is shifting fast, with the House taking up 3 major crypto bills this week and what Republicans have dubbed Crypto Week. And they are three different distinct efforts that are in the mix. There's legislation to establish stablecoin oversight, a market infrastructure bill that would define jurisdiction between the SEC and CFTC, among other things. And then a third piece of legislation designed to block the Federal Reserve from issuing its own digital currency, which has long been seen as a combatant to the crypto industry. And even though this week's crypto legislation centers more on stablecoins and market structure and a lot of the altcoins, the broader backdrop keeps reinforcing Bitcoin's role, no longer as a contrarian bet, but part of the institutional consensus here.
Yeah, and on that front, Meg, you'd think that if there were going to be a huge beneficiary of the stablecoin legislation, maybe we can show 3-month T-bills, that they might be one of them. This would allow it and make it easier for stablecoins to grow. The more they grow, probably the more treasury supply they're going to hold in coming years. So it's kind of a win-win from that point of view, although ironically, it's then kind of fueling the very problem that crypto was meant to fix.
Well, precisely. I mean, it's been fascinating to see Tether become one of the U.S.'s biggest creditors. They were the 7th biggest buyer of American debt last year, eclipsing countries like Germany. So it's been this fascinating power shift with respect to crypto being a big player and helping enshrine U.S. dollar dominance.
Do you ever hear some of the early holders, the real believers, but those people going, you know what, this is all becoming too mainstream, too crazy for me? Or is there nothing like that? Like anybody out there just who thinks it's overextended or no?
I think that people are grateful for the price momentum that comes with Wall Street wrapping decentralized products in very familiar institutional frames. And so even though there's this effort to mainstream it, make it more accessible to a Wall Street trader, at the end of the day, this is still decentralized technology underpinning it, where there is no central bank or government that controls the flow of these funds. And I think that that's what a lot of people from the community continue to appreciate about this industry, that even as governments adopt it, or I mean, if the U.S. passes some of these bills into law, that will certainly help to swell adoption, swell momentum, while these technologies still maintain their underpinning of decentralization, which is the core tenet of this entire industry.
All right, Mackenzie, for now, thanks. Appreciate it. Mackenzie Sagalos following the story for us.